One of the most common questions we get here at Agape Insurance Group is, what is the best age to take Social Security? Is it 62? Do I wait till I'm 65? Do I wait till my full retirement age, or age 70? Well, good news. I have Mr. Jim Blair with us this morning, who worked for the Social Security Administration for 35 years, is a Social Security expert, and is the VP and Social Security consultant, at Premier Security Consulting. Jim, thank you so much for taking just a few minutes to bring some clarity to this complicated topic with our audience today.
Sure, glad to be here. And this is an important topic. It's a question that we get asked all the time ourselves. And you know, the real answer is, it depends. So that doesn't narrow it down too much, but it does depend on each individual or couple's situation. One thing that we like to point out to folks is that technically Social Security is a personal benefit. My benefit's mine, your benefit is yours, and you're going to decide when to take it, independent of, say, if you're married, independent of your spouse. But we like folks to still consider Social Security more as a household income. When you're looking at Social Security, there's a lot of things to take into situation. And your particular situation will dictate what is the best time for you to apply. A lot of things will factor in. You know, it's not as simple as, I'm 62, should I file for my Social Security benefits? Or I'm going to wait till I'm 70. You know, people say maximize your Social Security. And I agree with that. You want to maximize your Social Security. You would think, okay, that means waiting till age 70 to get the highest Social Security benefit. But that's not always the right age. That doesn't maximize it for a particular person or a particular couple. So you're going to look at their situation. You know, there are times when 62 is probably the best time to apply. So we're going to kind of delve into all of that and see. A lot of factors are going to need to be considered before you apply. So Social Security has something called an annual earnings test. And what that does is it says, if you're under your full retirement age and you take Social Security benefits, but you still want to do some work, depending on how much you earn, Social Security may withhold some, maybe all of your benefits. So why would you file at 62 if you're still working and Social Security is just going to withhold all of your Social Security benefits? Versus full retirement age, that earnings test goes away and you receive your full benefit. But if you're still going to continue to work, you may end up paying income tax on your Social Security benefits, so you may not receive it all anyway. So your work is going to factor into that. If you're not going to work and you need the money, it doesn't make sense to delay taking your Social Security benefit. You're going to file for it as soon as you're eligible and receive that. You want to look at your health and your family history.
Sure.
Are you in good health? You know, if we knew how long somebody was going to live, it'd be real easy to say, okay, you should take your benefit at this particular time. But we don't know that. If we look at the average life expectancy, according to the Social Security Administration, a male in his 60s has an average life expectancy of right around age 84 to 85. A female in her 60s has an average life expectancy of around 87 or so. And they also tell us half of the people in their 60s will live to their upper 80s, early 90s, and a quarter of those folks will live to 95 or older. They don't tell us which ones those are. We have to figure that out on our own. But you want to look at your health, your family history. But not only are you looking maybe at your health, but also your spouse's health, because oftentimes your spouse may step into your shoes when you pass away. And when you take your benefit, that affects survivor benefits. So if someone files at 62 and they're the higher earner in the couple, and that person passes away, their surviving spouse receives their reduced benefit, if that's the higher of the two. And so the survivor benefit is reduced because you took your benefit early. Versus if you waited till 70, your surviving spouse will receive the higher benefit, your age 70 benefit. It all depends on how important Social Security is in your estate planning. You know, when I used to take claims for benefits, you would talk to people, and when you had a couple, both were still living and they were filing and receiving their benefits, and they were happy with what they were going to receive from Social Security. At some point, one of them would pass away. You would work with the surviving spouse and tell them how much their benefit's going to be, and they'd look at you and go, but that's not enough money.
Right.
And, you know, that was the sad part of it, because what they did earlier locked that lower amount in. And it was a difficult conversation, one you didn't like to have, but you had to explain to them, sorry, but this is the amount that you're going to receive.
Right.
You know, we know that when someone passes away, your bills don't get cut in half.
Right.
You know, you still have a lot of bills that you have to maintain. So how important is Social Security? You know, if you've got it covered in other ways, other assets, your maybe your 401ks, or if the person has another pension, that's fine. But it's something you want to take into consideration. You know who wants you to take your benefit at 62? The federal government.
That's right. That's what I
That's
say.
Right.
Government.
So are they looking out for your behalf? No.
No.
The federal government looks after itself, and you can't blame them for that. I mean, that's what they're supposed to do. But the reason for that is the break-even point for receiving benefits. If you take your benefit at 62 versus waiting until your full retirement age, it's about a 12-year break-even point. So if you file at 62 or you wait till your full retirement age, somewhere between 78 and 79, depending on your full retirement age, you're going to receive the same amount of money from Social Security. And then from that point forward, if you filed at 62, you're losing money. Well, we just talked about the life expectancy for males being 84, females 87. So you could lose quite a bit of money. When we look at various filing options for folks, the difference between filing at 62 versus full retirement age can be 100,000, 150,000, maybe even more. And that's not considering your cost of living adjustments. What's the difference in the spouse's ages? You know, if you have a couple and they're close in age, then usually the best bet is to at least wait till full retirement age, right? If you can, and or at least for the higher earner. The lower earner may want to file 62, but probably them waiting till full retirement age, and maybe even the higher earner waiting till age 70 over their lifetime will get them the most amount of money. Versus, let's say, 5 years or more difference in age, it's going to tell that younger person, go ahead and file at 62, because odds are you're going to receive that survivor benefit sooner rather than later. And so in the long run, you'll receive more money because you'll get the survivor benefit before you reach your break-even point. Right. So a lot of different things for folks to take into account before they think about filing. You want to do it before you file. You know, we plan for everything. We plan our vacations. We plan weddings, maybe plan divorces, but all sorts of things that people plan for. You need to plan for Social Security because it is a lifetime benefit. Regardless of what you hear on radio and TV, it's going to be payable. It will never completely go away. So it is a lifetime benefit. If you live to 100, they'll pay you till you're 100 years old. And you want to think about what's best for you.
Yeah, I definitely like some of the points that you brought up there. So let's just start with the first one about the planning. Give us some steps for those that are watching, because obviously we're Medicare experts, and that's one of our main verticals here at Agape. What are some steps they can do to plan? Maybe they're about to turn 62, or maybe they're about to turn 65, go on Medicare. what are some steps that you give to folks to make sure that they plan this correctly?
Well, the first thing you want to do, and everybody should do this, anybody age 18 or older needs to go on the Social Security website, that's
Okay.
ssa.gov, and create their online account. People may not remember because it was a long time ago, but they used to mail your benefit statement out to you every year, and you could review it. But they stopped doing that in 2012. So you need to, unless you're age 60 or older.
Right.
Now, that said, I talked to a lot of people age 60 who haven't seen this statement in years. So create that account that allows you to look at your Social Security benefit statement. And there's a couple of things you want to do. Why do you need to do it if you're younger? You want to make sure that your wages are being posted correctly on your record, because that's what Social Security is going to use to pay you benefits when you do reach your retirement age.
Okay.
Once you've created this account, they will remind you yearly, it's time for you to look at your account. Usually about 3 months before your birthday, you get an email. It's time to log in, look at your Social Security account, and just make sure everything is okay. And it will show you, it goes back about 15 years, showing you your earnings year by year. If you've created the online account, you can actually get a document from there that will show all of your earnings for every year instead of grouping them together. And for some people, that's important to know.
Sure.
But you've created this account, you can look at your statement, and it'll give you an idea of what your benefits are going to be. So that's the first step in planning, is looking to see what will my benefit be at 62, 63, 64, all the way up to age 70. And that way it gives you an idea of what that range would be. The benefit at age 70 is actually 75% higher than it is at age 62. First time I heard that, I didn't really believe it. And so I pulled out a statement and did the calculation, and sure enough, it's about a 75% increase. Of course, that's the good news. What's the bad news about waiting till 70? You're waiting till 70 to take your benefit. So that's an 8-year window. But, you can look at that statement and it will give that information to you. And if it's a married couple, you each want to look at your statement and then think about, should we both file at 62? Or should I wait till full retirement age and my spouse file at 62? Or maybe I wait till 70, my spouse still files at 62. And then any combination of that in there. Also, is my spouse going to receive a benefit off of my work record or me off of hers? So you'll want to figure out what you're going to receive at certain points. So that's the first step in making your plan.
Sure. And let me go back to something you said kind of early on, because I heard you talk about Social Security being taxed. Can you or not being taxed, or just depends. Can you talk about that and expound on that just a little bit more?
Sure. For a single person, if your income from all sources, and this includes half of your Social Security benefit, if your income is over $25,000, then half of your Social Security is subject to federal income tax. If your income is over $34,000, then 85% of your benefit is subject to federal income tax. For a married couple, those limits are $32,000 before it becomes taxable, and then it's at 50%. And then if your income is over $44,000, 85% of your benefit is subject to tax. That doesn't mean they tax it at an 85% rate.
Right.
It's just added in as ordinary income, and then you'll end up paying tax on it. Good news is, if you earn a couple earns $44,001, it doesn't automatically jump from 50 to 85%. It's a little progressive to get up there, but they look at what they call your adjusted gross income. They call it a provisional income, but it's basically all of your income plus if you have tax exempt municipal bonds, that gets added in, half of your Social Security, and then they'll figure out the tax. So what we tell people to do, if you have a CPA, ask them to plug in your Social Security benefit, and it'll tell you what that does to your tax liability. If you do your own taxes, just go on your tax software and do a little fake tax return, and it'll show you what your tax liability is going to be. Unfortunately, for some folks, their states tax their Social Security benefit. Most don't. Right now, there are 12, although I heard a couple of states have decided not to tax it. So we might be down to 9 or 10 states that tax your Social Security benefit. So most don't, but some do. But the feds definitely will tax it in certain situations. So they won't take income tax out of your Social Security benefit unless you ask them to. The only thing that is automatically deducted, as you should be well aware of, is your Medicare premiums.
Right.
But if you want them to, you can request they withhold some income tax, and they'll withhold up to 22% of your benefit for taxes. But you don't have to do that.
Sure.
But it is subject to federal income tax.
Yeah, that's a great point. So is that just simply when they go to get set up and call Social Security, they just tell them they want that? Is that how they would opt to do that?
They'll have to fill out a form. It's a W-4V, V like involuntary. And you can get that on the internet. Just Google W-4V, and it'll give you one. And then you just send that to your local office, and they'll take care of that. You can ask them when you file your application, if you're just in the process of initially filing, just tell the claims specialist while you're filling out the application. It's a little harder if you file online. You can put it in the remarks section. If you file your Social Security benefit application online, and you can do that if you've created that online account, then you don't necessarily talk to anyone, but you could put that in the very last, second to last page on the application is the comments section. And you could just type in there that you want taxes withheld, and someone would contact you and get that form from you.
Yeah, I'm seeing a lot more people that I work with on the Medicare side. A lot of them are doing a lot more of this stuff online. Even with their Medicare, they're going to the SSA.gov account and they're applying for Social Security, applying for their Medicare. Are you guys seeing more people in what you're consulting, or the arenas that you guys are in? Do you see more people doing stuff like that online as well?
Yeah, if people are able to do something online, we encourage them to do that. Another good reason to create the online account, if you're not receiving benefits, as we talked about, you're going to look at your benefit statement. But for those receiving Social Security already, if you've created the online account, you can change your address, request a new Medicare card. You can request a new Social Security card, change your bank information. So get a benefit verification letter if you're getting a loan and need to prove your income. You do all of that through your online account without actually having to call the Social Security 800 number and waiting 2 weeks for somebody to send it to you. So we encourage folks to file online. You can file for retirement, spousal benefits, disability benefits online. You cannot file for survivor benefits yet. That you still have to do through Social Security. In that case, you would call the 800 number, make an appointment, and you could do it either over the phone with a Social Security rep, or you could make an in-office appointment. Some people like to do things face-to-face, so you just go into the office and file that way. But I encourage everybody to file online if you can.
Okay. Yeah. One question I want to ask that just came to my mind as you were talking, because we work with a lot of people that are on disability, right? Disability, and they're on disability Medicare. Maybe they're finally getting their Medicare on disability, or maybe they've been on disability, and they're getting those disability benefits. And one common question I always get, Jim, is, well, what happens to my benefits when I turn 65? Is it the same? Does it go up? Does it go down? Can you speak to that just for a minute?
Sure. What happens, it's when you reach full retirement age. So it depends on what your full retirement age is. But when you reach full retirement age, your disability converts to retirement.
Okay.
It just is the trust fund that it's paid out of. You still receive the same amount of money. It's received on the same day you've been receiving it. So none of that changes. You're still eligible for your Medicare. Your premiums are still the same. It
Yep.
just changes which trust funds it comes out of. The good part of that also is a couple things. You don't have to worry about Social Security coming along and doing a continuing disability review. So you don't have to worry about them saying, we don't think you're disabled anymore and we're going to cut off your benefits.
Right.
That's a letter people on disability are fearful of receiving. You don't have to worry about that once you reach full retirement age.
Right.
The other thing is if you are able to do a little bit of work at full retirement age, the earnings test doesn't apply, but that doesn't apply to disability anyway. They have their own work rules and regulations, but that no longer applies. So you could do a little bit of work if you're able, and you don't have to worry about now or earnings showing up on your record and somebody from Social Security calling you up going, I thought you were disabled and you've gone back to work. So it's at full retirement age, and it just changes how or where the money comes from, but the person sees no difference.
Yeah, it's interesting. If I can go back to like the different age brackets of 62, 65, full retirement age, or age 70, a lot of people that we're dealing with, when they come in our office for 65, getting ready to go on Medicare, I'll ask them, are you receiving Social Security benefits? And a lot of them, or many of them, I should say yes, and would love for you to speak to this for a minute. But there's many of them that I talk to that just seem so fearful that Social Security wasn't going to be there when they turn 65 or whatever age. But you were talking about this lifetime benefit earlier. Just kind of speak to that for a minute, because it's especially, and I don't want to be overly political in this interview, but I know the political climate kind of determines that fear or level of fear. But can you talk about people that are taking it early just simply for the fact that it may not even be out of financial need, but it's more of a fear that they don't think the benefit's going to be there?
Well, that's the worst reason to take your benefit at a specific time, is because you watch TV or you listen to the radio and they tell you Social Security is going bankrupt and you're going to lose all your money. Let's talk about the worst case scenario. Sure. And that is no changes are made to the program. Social Security by law cannot operate in the red. They're in good shape right now. They have a surplus. It's about $2.8 trillion in U.S. Treasury bonds. And they're using those to pay benefits because they are bringing in less money than they're paying out. So they're cashing in these Treasury bonds. That surplus is expected to be gone somewhere around 2034, 2035. If they make no changes, then they'll still have money coming in. People are still going to be working, paying the Social Security tax on their earnings, paying income tax on their benefits. If there's any good news to paying income tax on your Social Security, it's that at least the Social Security trust funds get that money, so it does help the solvency. But they'll be about 20% short. And that means everyone would receive about a 20% pay cut. Nobody wants to see that. I don't think that's going to happen. Like you said, we don't want to get political, but we can say it's both parties' fault. It's true. They call it the third rail in politics. If the Republicans talk about changing Social Security, the Democrats talk about what awful people they are. If the Democrats talk about changing Social Security, the Republicans talk about what awful people they are. I ran into my local congressman in the airport, and he made the mistake of not having anybody with him. So I went up and started bugging him about Social Security, told him I worked there and what I was doing now. And he assured me, we're working on it. It's bipartisan and we're working on it. That was probably 10 years ago and they still haven't done anything. There are proposals out there. Eventually they'll make the changes. We were here at the same spot back in the late 70s. And eventually Congress made the changes. The President Reagan at the time signed the changes. Those changes affected all of us. Anybody listening to this was affected by that because the full retirement age used to be 65. Now it's worked its way up to 67.
Right.
That change has affected everybody that's eligible for Social Security benefits. So what changes will they make? They're probably going to look at the people that are still working. You're
Sure.
going to pay the Social Security tax on a higher income. This year, if you earn over 168,600, you stop paying the Social Security tax. That's probably going to get raised. And I hate to say it, but they're probably going to raise the full retirement age to 70. That's going to affect more folks in their 20s, 30s, 40s, maybe early 50s. But if you're 55 or older, what the law shows today is probably what your benefit's going to be.
Yeah. And in their SSA.gov account, does it show what their full retirement age is? Like when they log in, are they able to see that chart of what year they were born and what their FRA is?
Well, it'll show their full retirement age because one of the parts of the benefit statement is it shows your benefit at 62, 34 in each year. But if your full retirement age is not 67, because it can be somewhere, it can be 66 in 2 months, 4 months, all the way up to 67. It'll show that in there. So it shows your benefit at your full retirement age.
Okay.
And if you're not sure, you can always you can Google it and see the chart for that.
Yeah. Once again, a lot of this information is Jim is talking today is a lot of it is you could just literally Google these questions and you can see different charts and documents and PDFs and things like that. A couple of more things before we close today, Jim. And once again, thank you. I know this is going to be super valuable to our audience and to those that are watching this. Is in the beginning, you talked about, taking out at 62, but still working, right? How Uncle Sam takes a portion of that up until your full retirement age. Can you kind of go back over that real quickly? Like, what is that amount? Because we run into a lot of people today that, unfortunately, maybe life just happened. Maybe they just didn't prepare well. And so they're having to work at Walmart, Lowe's, the Walmarts, the Krogers or Publix, et cetera. And I'm seeing a lot more of my clients still keeping something part-time, but they want to be very aware of what that penalty is.
Right. And sometimes you work just because you want something to do.
Right.
So in this year, 2024, if you earn over $22,320 in earnings, it doesn't include pensions, 401ks, but this is earnings. So you work for someone or you're self-employed. If you go over $22,320, Social Security will withhold $1 of benefits for every $2 you go over. So if you earn $32,320, you went over by $10,000, Social Security is going to withhold $5,000 worth of your benefits. If it's the year you reach full retirement age, the amount you're allowed to earn goes up to $59,520. And that only includes months before your full retirement age. So if someone was going to reach full retirement age, say in September of 2024, they would be allowed to work and earn $59,520 for January through August without being penalized.
Okay.
And the penalty changes too. It goes to $1 for every 3 that you go over. So the one that gets most people are the folks before full retirement age, when they're at 22,320, because you can reach that fairly quickly. And you just want to be careful, if you can, not to go over. But, if you need to go back to work, let Social Security know. They'll withhold your benefits while you're working so that if you stop work and then Social Security finds out you went over and they want some of their money back, right. Now they're wanting money back and you don't have that extra income. So let them know while you're doing it. That's the important part.
Yeah, that's interesting you bring that up because we actually had a client that they went back, I want to say 2 or 3 years. Somehow it took 2 or 3 years to discover this, and it was quite a bit of money to the point that they were going to take all their Social Security benefits to pay this back. So when you're saying to let them know, talk about that for a minute. How do they let them know, or does the government look at that every year, or how is that figured out?
Yeah. When you first apply for benefits, they're going to ask. That's part of the application. But after that, the way you would let them know is just call their 800 number.
Okay.
Speak to the people at the 800 number and just tell them, I've gone back to work. I'm going to earn this amount of money. I expect to. They know it's an estimate. Who knows, particularly if it's in the beginning of the year, who knows what you're going to earn for the year.
Yeah.
And you can change it. So if you call them in January and say, I'm going to earn $40,000 this year, and they start withholding your benefits based off of $40,000, and then in a few months you get let go, then you can call them up and say, okay, I'm changing my estimate. Eventually, they will work it out, because if you can take your W-2s or your Schedule SC if you're self-employed into the Social Security office, or it gets posted to your record eventually. And probably that's what happened to your client. It took a while for some earnings to get posted to their record. Right. All of a sudden, Social Security said, hey, this person's not overpaid now, but for past years, and they do always want their money back. Some good news along that line. If someone is overpaid, Social Security used to say, we're going to take your whole benefit if you don't pay back all at once. And they've changed that rule. And now the most they'll withhold is 10% of your benefit. So at least you still have most of your income still coming in. That's a change that I think is long overdue, but they finally made it.
Yeah, and thank you for highlighting that, because I think she was under the impression that they were going to take everything away from her. So I'm glad. That's a great point that you bring up. Real quickly too, the figures that you gave a few minutes ago, the 22,000 and some change and the 59,000 and some change, was that for single person? Was that for married? Does it matter if they're married, and the spouse's earnings factor into those that penalty, if you will?
No, it's just individual. So if you have a married couple and one is receiving Social Security benefits and the other one's still working, they only look at the income from the person receiving the Social Security benefit.
Okay.
Yeah. The spouse's income doesn't count.
Okay. Because I get asked that a lot as well. Because as you well know, I mean, you're the expert. You've been around this a long time. But a lot of times there's just a lot of fear and confusion. And as you said earlier, we don't want to let fear drive our decision when it comes to Social Security, because it can dramatically affect you for the rest of your life.
Right. And, nobody wants to get in trouble with the government, but it's just, they can be a pain to deal with. I worked here 35 years. We tried to not be a pain, but sometimes you can't help it.
Yeah.
And even if you're nice to someone, the fact they're overpaid $20,000, $30,000, they're just going to be fearful of what's going to happen regardless of what you tell them. So it's best to try to keep Social Security informed so you don't run into that. If you do have options. I know the main topic wasn't overpayments, but if someone is overpaid, you can request just a monthly payment amount, and they normally will accept that. Could be less than 10% of your benefit if need be. And the good news is Social Security doesn't penalize you because you're overpaid, and they don't charge interest on it. So, nobody wants to be overpaid by the government. But if you are, at least with Social Security, you have some options.
Sure. And as we close today, Jim, anything else that maybe just comes to the top of your mind that you just go, hey, I really need to share this with the audience today before we close?
Yeah. Think about it before you file your application. You have a year to change your mind.
Okay.
However, if you change your mind, you have to pay back all the money they paid you. And that can be difficult sometimes.
Yep, it can be.
So, if you get $2,000 a month and you waited 10 months, that's $20,000 you have to pay back to withdraw your application. So make sure you make a plan. Look at your Social Security options. If you don't understand it, find someone that can help you with that. Even if you pay a few bucks, it can be well worth it in the long run. If you can figure it out on your own, that's great. But look at that statement, create that online account, and just be aware of what your options are before you file. And then when you're ready, you can file, and you'll be receiving your benefits. And
Right.
then every month the government sends you money. Can't complain about that.
Yeah, can't complain about that. That's right. And that's part of that planning that you talked about early on in the interview, right? Is make sure that you're planning. Well, Jim, this has been a lot of value. You brought a lot of clarity today. I know the people that will be watching this are going to be like, wow, you've answered some questions that I just could not get some clear answers on. Because even on the internet, sometimes it can be overwhelming and confusing because this person says this, maybe this person says this or whatever. And so we greatly appreciate you coming on today and bringing some clarity to this very confusing and overwhelming topic. And the way that you can help us help more people is simply by hitting the like button, hit the subscribe button as well. Share this with somebody who's maybe wrestling with this question now. Give us some feedback below in the comment section. If there's a question we didn't answer and you want us to answer it, type in the comment section below and we will get you the answer to make sure that you plan for this correctly and make sure help you make the best choice for you and your family. Well, thanks for watching, and we'll see you on the next episode.